Welcome to the club. My name is John, and I will be your host of this meeting. So glad to have you back. Just to give you a recap, in our last meeting, we were talking about the withdrawal strategy, where I took a look and used myself as an example with the standard deduction of $15,000, as I am not 65 yet. And we took a look at withdrawing that from a pre-tax IRA account where we would just use a standard deduction as someone who's 59 and a half years old with some part-time income and a small pension where we came out to about $483. I felt that was one of my most important videos because as we move into May and further into this year, there may be others who may need to draw down on their retirement accounts to meet their living expenses, which is going to be a wise move. It's always going to be cheaper for you to take some of your retirement money and use that to keep yourself whole rather than losing your vehicle and losing your home and then having to go out and start all over again. The money you take out of that retirement account, once you find another job, you can always um, come up with a plan and contribute more. That's what I've been doing. Um, so I felt that was a very good video. If you are not 59 and a half, you're under 55 years old, in your early 50s, you would have to be subject to the 10% penalty. So depending if you're married or head of household, you would just subtract 10% that you have to hand over to the IRS. And again, you want to talk with a certified accountant on that so that you make sure you don't have any errors and be stuck with a bunch of additional money that you owe the Internal Revenue Service. But there's many people going in the months ahead that may need to do that, and it's always best to have a good example of how to manage your taxes, what questions to ask, and say, hey, can this scenario work for me? So I was real proud of that video. In this particular video, I wanted to talk about the process to build up an income bucket because I was just looking at my investments over the weekend, and you know that I'm heavy on the charts. Um, I store all of my statements, and I went back, and my rollover IRA had a peak February, mid February, the 15th, the 16th, and the 17th. It had peaked. And as of today, with the situation with these tariffs and some of the statements from our president, it is off by about $11,000. I think I'm at 102. I was up to 114, maybe 113. So I said to myself, okay, so this is going to rally back. That's the all time high. How are you going to protect your income? And I started thinking, when it rally backs, I'm going to take a look at the funds in there, which I've already done. Some of those funds have 400% growth, thousands of dollars in it. And what I'm going to do is, once it recovers, I'm going to sell a certain amount of shares from about 7 or 9 of the mutual funds, and I'm going to generate about another $9,000 to $10,000, and I'm going to put it in a fixed income investment. And once I put it in that fixed income investment, it will be within the IRA. But if I ever get let go, then I definitely will be able to use the opportunity to take just enough out to meet the standard deductions and not pay any taxes on it and keep myself whole. Because, you just never know. At 63, I won't be at the 20-yard line to make that big score on retirement until I hit 65. Then I'll have my own health care coverage. But once I do, I want to have money in the fixed income side where I can withdraw out without any worry about what's happening with the stock market. So that's what I want to talk about. And basically, what you're doing is you're tracking your investments, you're keeping an eye on them via the ticker symbol, you're making a note of their all time high, or they probably were at its all time high mid-February. So you make a note of that number, and when it recovers to it, you pick out a certain amount of shares and you skim off of it and convert it into cash. And what will happen is your portfolio will change in its value. You'll have more cash in it than you would have equities. And in that case, you don't have to worry about what's happening in the stock market when it goes down. You have somewhere to draw. And that's very, very important. Everything that's happening now, I went through this in 2022, and I had a lot of equities. I had some brand new investments. They were all in the S&P 500, Nasdaq, technology, and so forth. And I've lost a lot. It went down about 30%, and they clawed back to zero, and it went up to 40%. But I didn't take any of the gains off of it, and now they're back down. So I don't want to do that anymore. I want to keep track of these and convert some of that into cash, so that when the market goes down for a couple years, I can still make some money. Now, I'm still making money on the fixed income with the government short-term notes in the money market accounts as we speak. Um, the VO Bank is still paying over 4%. Previous year was 5, and 2024 is 5%. So there are good investments out there where you can get that guaranteed. Never mind the cost of inflation. You've got $50,000. You want you to have $50,000 3 years from now when you need that money. If you put it in equities, there's no guarantee. That's the risk factor. So, and sequence of returns. And we want to eliminate that by skimming some of these returns and put them in fixed income. It hasn't been too many times that you can get a good interest rate off of a CD, a money market, or some of the bonds. I would stay away from bonds because they're tied too much to the interest rate. The money markets and the CDs will be easier as far as I'm concerned. But it's up to you if you want to buy some of the treasury bonds or get into a bond index. But I'm promoting the money markets in the IRAs so that you can have something to draw on, not worry about your equities. So that's it for this meeting. I just wanted to talk a little bit about some of the strategies. We take a look at our equities in the growth portion. We look at them to reach their all-time highs or have tremendous growth. If you got investments that are up any more than, once they hit 100%, that means they've doubled. But if you got investments that are 300-400% since you invested, you can afford to take $1,000 out of it and move it into a money market. You still got a whole year to go for it to appreciate, and then you're going to have capital gains paid out the last month of the year in December. And you may be getting some now, as you can see with the Fidelity Select Financial Portfolio. I picked up $54, and I didn't expect that in capital gains. And so that's what we want to do, is we want to build up that income bucket, have it set there ready to go when we need it. Because number one thing about your work life and your retirement life, you have to replace your income, and you got to protect it. Okay. This is John, and this is the Retiring and Investing Club. And I'm going to feature someone who retired this year and checked all the boxes on how to successfully retire, and is doing quite well. And I will present that and get that out to you in a little bit. Thanks for watching. Be sure to like and subscribe. Okay, folks, let's meet Pete here. Retire Early with Me is his channel, and if there's ever been a person who's checked all the boxes for the financial independence, retire early movement, it would be this man right here. He has done it all, and he's been retired for 3 months now. I think it's about his anniversary, either yesterday or today. And he was originally worked in the cable and wireless industry, and he decided he wanted to retire early. Didn't have to. Um, I started following him in the spring of 2024, and he has managed to get his budget down to $1,200 a month. And number one. Number two, he downsized his home and purchased a condo and used some of those proceeds to put away for his future in one of his safe and fixed income investments. Um, he's living a very frugal and modest life, but he's staying busy doing things that he wants to do. And he originally mentioned that he invested all in the S&P 500. And with what we were talking about is when apparently when he had those rise up in the S&P 500, he probably moved some of his money into fixed income, and he took advantage of the rule of 55. He's 54 and a half. He will turn 55 this year, and he's withdrawn just enough to cover himself out of his 401k. And he's got enough to cover him from 55 to 67. He's got a couple pensions that'll start kicking in. He's driving a older model sedan that's running really good, and he can do whatever he wants. And there's nobody that I know of that has executed the fire movement better than him. So this is Pete, Retire Early with Me. He publishes his monthly budget. He keeps up to date on what he's doing in his personal life. And if you go through some of his video catalogs, he'll explain how he goes about making his decision. We were with him when he was selling his home, and then he already said, I found a condo, and then he did a walkthrough of it before he even moved in, which I thought was really cool. So this is Pete with Retire Early with Me. It's a good channel to check out if you're thinking about retiring early, or you just want to see a happy guy who's done all the right things and checked all the right boxes. So I'm going to go ahead and end this meeting. My name is John, and I am the host of the uh, Retiring Club and Investing Club. Thanks for watching, and give me some likes and shares. Thank you.